Welcome to today's market report.
US stocks ended lower and the dollar lost ground on Friday as negotiations to raise the US debt ceiling were put on hold, jarring market participants as they headed into the weekend, and the US moved closer to the deadline to avoid default. While all three major US stock indices ended the session modestly in the red, they all notched gains for the week, which was marked by solid economic data and the tail end of a better-than-expected earnings season. Initial reports that debt ceiling negotiations had reached an impasse rattled markets even as investors were scrutinizing Federal Reserve Chairman Jerome Powell's remarks in a panel discussion for clues regarding next month's interest rate decision. All eyes on Washington, and investors remain focused on the debt ceiling. It's a bit like watching a nuclear standoff and hoping the other guy isn't crazy enough to hit the button. Powell said that uncertainties surrounding the lagging impact of past rate hikes and recent bank credit tightening made it unclear whether more monetary tightening will be necessary. Investors are trying to better understand if tighter bank lending due to the regional bank crisis will allow the Fed to at least pause on future rate increase. This is new territory, and it is not perfectly clear if the Fed will allow tighter bank lending to replace tighter monetary policy. Treasury Secretary Janet Yellen told bank CEOs that more mergers may be necessary to notch in the bank liquidity crisis. European shares closed higher, and the German DAX reached a record high as hopes of progress in US debt ceiling talks boosted investor sentiment. Europe's trading day ended prior to reports that the talks had stalled. The Pan-European Stock 600 index rose 0.66%, and MSCI scheduled stocks across the globe gained 0.13%. Emerging market stocks lost 0.07%. The dollar index fell 0.35%, with the euro up 0.32% to 108.03, pounds at 124.38.
This is today's market report. Thanks for listening. We'll see you next time.